Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry I am late. It is the 4th of Thursday. We got unemployment claims, and the market just looks like a complete mess this morning. So we come in here to our charts. I got to be fast here. Yesterday we came right to the 50-day moving average overnight, extending down below it here. You can see the evening action has been, well, I mean, they've flopped around a bit, but it doesn't look positive. Here, the treasuries still down at their lows. And some of the other markets that are starting to concern me. Oil, not so bad. Gold and silver taking another hit, and then copper just, like that was a 4% down move in copper. That is a big warning sign, I think, because that's been one of the best markets. You can see the dollar moving up a little bit, so there is some dollar flight going on here. When I come in, I look at the liquidity situation. It's not the best, but it's not a disaster yet still. So we're going to have the jobless claims numbers come in here. We're looking for a reading of, let's see here, initial jobless claims at 750,000 is the estimate. And we got about 30 seconds. I will turn on the text to speech. Turn on auto read, tweet deck coming in here. We're not getting the number quite yet. Number sounds late. That is usually not a good thing. Okay, 745.
Grant Hagen says, when is Powell speaking? Jens Height says, new to futures.
little
Do you
under.
have a personal spark notes of what trading futures is? Or would that be better served in a Google search?
What trading futures is? Well, there are products called futures, and you trade them. Hold on a second.
Vlad Stolyarov says, Ich hab wohl Bock auf Bier. I'm totally up for a beer.
When is Powell speaking? Powell doesn't speak until like noon Eastern time, so I will be long gone by the time he talks. It's a good point. Market's expecting him to address this. And yeah, I don't know. The whole thing is just like, so something I'm finding interesting also, there was an article on Zero Hedge about overnight repo rates, that there was a ton of shorting over there, and that the rate actually went to negative 4%, which is pretty insane. It seems like under the surface that there's some real dysfunction in this market, that, but I didn't see it on CNBC or Reddit or anywhere. So like not the whole market isn't aware that things are like falling apart at the seams in the treasury market in spots. So, oh, look, J2 finally took a trade. That's cool. So futures are a derivative instrument, and basically you can take a long or a short, and it's a zero sum game. So you can go short, you're matched up against the long, and then you put margin up, and you will have to pay the difference between the price that you took and the price that you get out at. And the broker can take you out if you take too many losses. So that's futures trading. And there's a couple of different
Grant
categories
Hagen
of
says,
products.
yes, the whole thing feels like a house of cards. I expect Powell to pet the dog.
Oh, there you go. Pet the dog. And then one of the advantages to futures trading is that you can trade commodities. So you can trade like corn, gold, silver, oil, lean hogs, food, these sorts of things. But then you can also trade equity indexes, which is what we usually do over here at the S&P 500 futures. And you can also trade treasury futures, which are the most liquid instrument in the world. So that's what we do in futures trading, gents. Yeah, the whole thing feels like, it's just like, why is the repo having so much trouble? Why is the treasury liquidity so light? You know what I mean? There's just a lot of, and then the larger market seems to be like clueless. Like the equities guys are like, oh, it's just more fear mongering, higher rates, everything will be fine, no. And I'm like, you guys have no clue what's going on, do you? That is 745 is a lot of claims, but Prince Philip undergoes successful heart procedure. Soulful Wanderer, good morning. Oh, it's a lot of new people I'm seeing here in chat today. Welcome to the stream. Well, I think we need to go and check some of the pre-market stocks. It looks like Brandon traded a short there, but it doesn't look like it's going very well for him. Let's see here. Do we have any later releases today? Like, do we have 8 o'clock factory orders? Bill auctions, and then, yeah, Chairman Powell speech at 12 Eastern Time. Okay, well, I don't see much going on there. Yeah, silver down. Of course. Silver has had some pretty aggressive pushbacks from this move, though. Well, let's see here. What's Ooh, here's a good test. J1 took one long, and J1 took one short, and J2 took one long. So we'll see which one works out. And at pretty close to the same price. Cheeky Benjamin, good morning. A suspicious number of new people today. You guys, what's going on? You're making me suspicious now. I'm immediate. What's going on? That's weird. So many new people. How did you guys find the stream? Man, looking at the E-mini over here, there's some pretty wild volatility overnight. Lots of slippery areas, especially around this, below 38.20 area. Oh, okay.
Chike Benjamin says came when GME had a run, stayed for the quality content.
Well, that's good.
Grant Hagen says we might trade fairly flat on the SPX until Powell. VIX is down along with the S, so that is curious. Looking forward a pop to fade after Powell. Soulful_wanderer says quick question, I am currently bag holding a tech stock. I know you trade futures and I took on excessive risk and it may take months to recover. Should I cut or hold and study more and wait for rec?
Oh man. Well, okay, so first to Grant's comment. I also see the market being at the very least difficult to trade until Powell comes along, because there's going to be a lot of big players that are going to hold off on their biggest plays until that happens, right? We'll probably still get some action when the S&P opens. Now, to the bag holding, man, so you're asking me a question that I can't really, like, I have to be careful about how I answer, you know? Because I can't necessarily give you space. If I came in and I said, oh, you should sell it, and then you sold it and it went back up, then you could blame me, right? So I can't give you like specific financial advice. So here's what I would say. If I feel like I don't understand what's going on, or I don't know what I'm doing, then as soon as I realize that, I get out, right? Piece of information that comes along contradicts what I knew. It's just not behaving the way that I expected it to. I get out. So taking on excessive risk. So the thing is it also depends on like how speculative you're talking about here, because on the longer term like view here, if we come back to like our daily chart, which is probably the sort of thing that we're talking about, it's been pretty ugly, but it's still just a minor pullback. This is really volatile though. Like the size of the candles is concerning. Okay. So could we have a deeper pullback down to the 200-day moving average? I think that it's a real possibility given what the treasuries seem to be suggesting to us. But we don't really know that. It could be fine and come back up. And, depending on what happens, for instance, if the Federal Reserve steps in and like say Powell today says something that is like bullish for low, something that suggests that rates will back off, right? And that tech and growth stocks can continue on and start doing well again. Then maybe your tech stocks come back up. You know what I mean? If you're talking about individual issues, it's almost always going to be a better policy to be holding them for the long run, being in a company that you really strongly believe in and think has a strong future. So I think that's about the extent of the advice that I can give there on that. Would the 200-day pullback cause a 25% correction across the market? I think that a 20% correction is actually somewhere lower than that. Right? Where are we at right now? What was the high? 38.61. Oh, 3,000. So 3,000 would be well below the 200-day moving average as a 20% pullback.
Vlad Stolyarov says don't believe Kramer and CNBC and don't backhold Cathie Wood's stuff like PLTR, just BC she buys random.
I'm a little concerned about how Cathie runs her fund, to be frank. She's doing a couple of things with the way that she runs her fund that I feel are irresponsible.
Chike Benjamin says if it's a stock that you just FOMO'd in, but have no knowledge about it, sell. If you bought because you believe that company is going to grow and stay strong, just hold the bag and buy if you have dollar.
Mm-hmm. But here, when you're doing stocks and you're going to hold stocks, that's when you really want to get into building models to judge their valuation and testing how well it works and all of that sort of stuff. So never fight trends on earnings when they're more than 5% down. I don't know. I mean, stocks is its own whole world. There's lots of things in stocks that I'm aware of, but I haven't actually done the back testing and testing on them, so I can't really say for sure how you do them and stuff. E-mini making a good push through the resistance there. That's a pretty strong breakout candle. But treasuries are pushing down at the moment. So I got these new headphones, and the bass on it is very different, and it sounds very different, and I'm not sure if I can handle it. I'm like, I need to go back to headphones that don't have as much bass. And then I think, oh, maybe I need to go into the OBS and not send you guys as much bass. But then maybe that's why some of you are like, oh, your voice is so nice. It is deeper than... They are HRM, they're Pioneer HRM6. So I used to have HDJs. Maybe I should have gone to the newer version of the HDJs instead of this, but I wanted to get it for producing. I think these probably are better for producing. That does seem to have a flatter response, and I can hear more details. It was because of the Kathy Woods trade alert. Well, let me tell you something. This is kind of like the big rant that I always do. There is a lie in the retail trading industry. It is pervasive. It exists at every level, and retail traders overwhelmingly fall for this lie. And the lie is this, that you should follow other people. That the path to success in trading is following somebody else that's successful in doing what they do. And it's false. Particularly in the case of somebody like Kathy Woods, the fund that outperforms that year tends to underperform the next year, almost always. It's very difficult to manage a large fund for starters, especially if you're an innovation fund. Like that one's bound to blow up. Who's Kathy Wood? Kathy Wood is the asset manager for ARKK, which is the growth future stocks kind of thing. And she's made a ton of money and has become the largest exchange traded fund because of their investments in Tesla. They put a huge amount of money into Tesla. Disruptive, yeah. I forget the exact name of it. Disruptive. Is that what it's called? What is it called? The Innovation ETF. ARK Innovation ETF, that's right. So yeah. But she's a peddler. But it always comes like everybody says, okay, so you just go and find this guy and he will have he's had success and he'll have this straight signal for you to follow. And you just trade that signal every day and then you'll go and you'll be successful. And when I look at the people that have been around and doing this for a long time and have been successful at it, I don't see that. Doesn't work that way. They are constantly changing what they're doing in response to the market, and they're constantly researching and having to find new edges. And that is why following somebody doesn't work. You have to do the work yourself and find the edges yourself, because it's a competitive game. And if somebody is selling it online, you're unlikely to be competitive with it because everybody knows it. So I've seen a lot of millennials fall into this with the most recent market, saying, I just need to follow what Kathy does, or just buy ARK. And I think that they're going to pay. Yeah, this is what's the most valuable lesson I've ever earned in terms of trading. I will never follow someone again and rather find my personal edges. There you go. And people believe manipulative. Do you think that she's manipulative, HF? I just think she's crazy. she believes a lot of, like, the thing is I'm not crazy, but there is a lot of faith behind some of the calls that they make. Faith that this technology is just gonna like work out for them. When you're talking about very, very speculative, high risk things. Okay, like Tesla, for instance, is a perfect example. Everybody acts like Tesla is like a done thing, that they're going to be the car company of the future and batteries of the future and just be up in everything. And no, it's a highly, they're valuing it at the same market cap as all of the other automakers combined, and they don't really have a technology that the other automakers don't have. You know, they have strong conviction, I would say. Yeah, it's just, and the valuation that Tesla commands right now is absolutely ridiculous. Frankly, yeah, it's absolutely ridiculous. And then you got a fund manager like Kathy, just has 100% absolute faith in it. For who, like, how? How does she have some model in there that says that this is actually a good company? Or is she just, I've read about it and I think that it's positive, and she has complete faith in it, right? And how can you have that kind of faith in it? Like, it goes down, you own 10% of the company, it goes down, you buy more. That's just like, ugh. And then everybody goes, oh, they bought more, I should buy too, and trying to follow their market impact, which be really careful about the market impact thing too, guys, right? Because the execution impact of large meta orders is a square root law, which means that the larger the meta order becomes, the impact starts to trail off. So they might come in and have a big impact, and then you guys are all going to get in and you're going to have like no impact, and it's going to move. It's so much easier for it to move against you in that situation, right? The counter argument is that Tesla is more than a car company. Well, yeah, well, that's why I brought up like the battery thing. But then I come in and I say, okay, but still, can you show me a model where we try and find the intrinsic value of Tesla that justifies the valuation that it has, going off of that assumption that it's more than a car company? So the value it is more than a car company. Where do you get at? What is the price that it should be, according to you? You know what I mean? Tesla getting out of the S&P was a scam, screwed people with 401ks. Maybe. Is a 200 SMA the standard of the industry? I see many people use it, and I see others use 180 SMA. Which one is better and why? So this is complicated. So I think that the easiest way to answer your question is to backtest it, okay? And show you what happens. So we're going to come in here. And I have this, well, I can do moving average. Then I think I have SMA. I have daily SMA there, actually. We can do it like that. There's a 50-day SMA, And we're going to run it on day bars, 1 day, on the S&P 500, going all the way back to the beginning of my time in markets, 2008. So January 1st, 2008, include commissions, run. And then we will do an optimization. So we will say you start with a 50 period, and we will go up to a 200, and we'll do it 50 period at a time. Okay. Okay. So if you come in here and you look at a 50 period moving average for starters, okay, when you look at it, okay, the long trades work, the short trades don't. So what does that tell you? Does that mean that the thing has edge because overall it has a total net profit? Not so much, because the S&P 500 has a bias long, right? So we should expect that this should happen. That, you know, if you take longs, your longs will work out. And if you take your shorts don't work out. You could say, you know, get out and then get back in again when the moving average says to. Okay. But let's just create another tab here. All right. I'm going to create another tab here. Actually, I need to duplicate a new tab. Yeah, this is going to play the song here again. I think that Tesla's probably overvalued, but any company is going to dominate the autonomous vehicle and battery tech market. They're probably well placed to be that company. Maybe. I think it could end up being way more balanced than people think. Okay, so I have a buy and hold strategy here. So we don't need to do an optimization on this, but we do want it to run on the same time period. I'm going to turn off the song bit here. I know you guys love it, but I find it a little annoying. Okay, so here's buy and hold. Okay, so note that all of these moving average strategies that we have tried here do not beat buy and hold. Right? Buy and hold, you'd make $117,000 if you just bought it the first day of this in 2008 and just held it. Have $100,000, right? Back over here. Okay, so then the next thing is look at the win rates. Look at the win rates, percent profitable on some of these. Well, it's not a very good probability, does it? So this tells us something that I say almost every day now, it seems, about moving averages, and that is that moving averages are not a predictive signal at all. What they do is they hint that you might be at the start of a new trend, but you really can't tell if it's the start of a new trend or not. So does the market look at those moving averages? It seems to me that they do. Like when they get below a 50-day moving average, market behavior changes. And it seems to me that there are robots out there that are trading off of the 50-day in that, like, they change their strategy when they get below the 50-day or below the 200-day and whatever. Okay. But how much edge is in there really? Well, just looking at that thing and saying, I should be short the market now, there's no edge in it to that extent at all. So it's something that I would watch, but I would be very careful about making hard conclusions about what it means, right? See, he says, when you're trading above the 200, you're in a bull. When you're below it, consider a bear. So taking longs and a bear and shorts and a bull may be pushing water uphill as an example. Yeah. I think that if you're going to use it in your system, it would probably be something to the effect of that you're going to favor the longs or short scalps on a daily basis based on the 200-day moving average. But you could also, it's probably more likely. One of the other things is you might see that kind of behavior, but it may be because it's correlated to something else. And I'm going to bet you that there are a lot more systematic trading strategies and robots out there just trading off of straight volatility, and the VIX and so forth, than there are off of the daily moving averages on the indexes. But that's just about like everything there is to know about daily moving averages, right? The actual numbers on it aren't actually that good, are they? Like, especially the one, like here on the short trades, you believe that 14%? It's bad. Anyways, also it touches that a lot more often than you would think, right? 121 over the past 10 years. So let's see here. Did I miss any other comments here? Is Tesla's value in its innovation rate? I'm not a specialist, nor can I evaluate Tesla in that manner, but to the average consumer, it may seem that the value of Tesla comes from its publicly announced, products and features. It seems to me, here's my argument. It seems to me that Tesla's primary value is the fact that millennials like it, that millennials see it as the future of something. But as a company itself, I just don't see how you can value the valuation it has. Michael Burry, he's the big short guy. He thinks that Tesla is going to decline like 80-90%. So then you're showing another falsehood. So straight up from any empirical standard, the technical edges do not perform the same way on daily charts as they do on intraday charts. Not even close. They don't even perform the same between instruments either, right? We showed that yesterday. So here, I'm going to come back to moving averages. Moving average, I'm going to use my ultimate filters because this one allows me to select different types of things. So here again, optimization. 50. 200 and 50. AU is equal risk reward out, but I'm going to give it. Can't I tell it to not use the targets? Well, I guess it doesn't really matter, but we just set a really big target. So the issue with the targets is that these targets tend to make these kinds of technical strategies a lot less effective. Good morning, bots. Ooh, by the way, that reminds me, how is our robot doing? Wow. So with a 200 period moving average, we are able to get it close to profitable. I didn't include the commissions on that, did I? Okay, so none of them are profitable. 200 is almost break even, right? That's actually, well, when you look at the percent profitable though, see how with a large enough stop that it's like a 50-50. So is it different from how it performs on the daily charts? Yeah, it is. So then you kind of get into filters. So it's like, well, if it's a 50-50 thing, it's, first of all, a filter that's only 50% chance of predicting something, does that actually make it a good filter? Well, I don't know. I've definitely put a simple moving average on strategies, and that moving average increased the win rate of it a little bit. But the issue with a moving average in particular as a filter is that it significantly reduces the total number of trades you get, right? It basically halves it. It basically halves the number of trades that you get, which for most strategies is just too much. So then you have to go into all of this stuff of like, taking a number of different tests and creating a score so that you can kind of get this fuzzy thing to give you when you should go long or not. That's why they do that sort of thing. Michael Burry has predicted 20 crash. Has he? I don't know. He really doesn't like Tesla though, and he thinks that Bitcoin's gonna fall apart too. What do you think about trading technologies ADL? Isn't that the language that they use? Algo Design Lab. Oh, is that their visual? Let me tell you what. A lot of trading software these days, NinjaTrader included, have put a lot of effort into, you go in and you use the GUI to say, I want this indicator, and when you buy above it, you buy, and when you go below it, you sell, and all of these things about it, right? To make it easier for people that don't know how to program. And in my opinion, you'll always be better off just learning how to program. And that oftentimes the amount of effort that it takes to write those strategies yourself is less than the amount of time that you spend trying to figure out how to get the auto trader or the interface to do what you want. Because so many of the support requests that I see out there are, I tried to build this strategy in the thing and it doesn't behave the way that I want it to. You're just better off writing it yourself. And I know that for a lot of people, that's like, well, I'm not a programmer, but it really is not as difficult to learn as most people believe it is. It's just language, so. And especially with all of the example code and everything that you've got out there, you can probably search for a strategy that does similar to what you want it to do and find code and copy and paste and then modify. So. This is part of what's so nice about NinjaTrader. So you got so many ready-made examples for you, including ready-made examples in their own documentation. What computer language should you learn to code algos? Well, you can use anything that you really wanted. But in NinjaTrader, you're using C#, and in Python is really popular too. Although I kind of question the Python thing, because when I look at Python, like every day I see people posting tutorials how to write an algorithm with Python, and I'm thinking like, okay, you have to do this whole tutorial to explain how to hook your program up to the data and do all of these things and backtest it. And if they just did it in NinjaTrader, they would get all of those things for free, and you could get straight into testing. And I've run across many times people where they're running a strategy in Python, but they can't get the same data and information out of their backtests as you can with just the built-in NinjaTrader strategy analyzer, which is kind of funny. So anyways, I'm not a huge fan of those like visual languages and stuff. NinjaTrader is written in C#. I believe so. There could be portions of it that are written in C++ or are handled differently in the DLLs, but essentially it is a WPF C# application. I say WPF because if you really want to, you can kind of get into really funky stuff where you will actually modify the interface, like the market depth tapes that you see in the upper left corner. Because it's built in WPF, you can make your own controls like that. But they provide you with C#. Yeah, you can use any C# library out of the box. And you can, you can import your own C# DLL or library if you need to. I have a couple of indicators that use some complicated math framework to do things. Well, I'm still just not feeling this market today. It does kind of feel like that it's just going to be difficult until Chairman Powell speaks. So let's get into the thing that we were talking about yesterday, right? So let's see here. First question is, how did the Fisher transform on its own perform? So I think I put that one in oscillators. Fisher, there you go. Reward factor 1, stop. We'll give it a big stop. Threshold 4. 1 minute. Commissions. We should be able to go back, but let's just go back to 2016. Okay. So here again, you are getting a high percent, over 50% profitable, but only on the longs, which you should always expect because of the S&P 500 tends to move up, right? Well, let's try it on a different instrument. Let's try it on the 10-year treasury and see what it does. Hey, Anthony, how are you doing? Let's see here. What's he got? As a programmer, do you like or understand Cardano programming functions? Have a good day. Oops, I almost forgot. I think Marco Burry is the wrong this time. On Tesla or on Bitcoin? Well, he made a really good point the other day on Twitter about Bitcoin, in that the reason they've been able to get to the price that they have so quickly is basically through debt, right? Like, all of this money that MSTR has bought, they basically borrowed it from bondholders. So that just kind of, the reason that that's important is because if you lose a certain amount, then it kind of forces liquidations, right? Both. Oh, okay. I'm not a believer in Tesla. I think that eventually it's going to have to come back. And on Tesla, the speed that it's done so the past few days is quite excessive, right? Okay, anyways, we're going to run this on the 10-year, right? It's going to take a while for it to download the data, I guess. In the meantime. Oh, okay, so here is kind of a similar thing, but it's on the short trades. But you can see, like, the amount that it's actually making in comparison. Over 4 years, you make $1,000. It's not really, it's kind of just break even, right? It's kind of just break even. So then we were saying, now I have to come back in here and see, how are we? Well, because there's a threshold built into it. Why did the threshold matter? Oops, that's not what I wanted. Oh, okay. So I'm actually using overextension on the Fisher as a turn. There, he's saying he thinks that Michael Burry believes that both Bitcoin and Tesla are in bubbles, and Anthony's saying he thinks he's wrong about that. Okay, so if we were just to do the cross of the zero line. Mm-hmm. Anyways, so I'm thinking I'm gonna take this, and then we wanted to can't combine it with your other thing, right? What was it? Oh, what did I call it? Oh, okay. Okay. So I will say trend. I think that this was, 1,000 was the best. Okay. So do we say, and, well, what was, because I did that one too. How are we doing that one? Oh, okay. That was a cross above. Let's see here, Blunt. Which way should we do it? Should it be Fisher Transform is rising and the Kalman is rising? Should it be the zero line? I don't think that the zero line would be very effective, right? Stupid bot. Hey, how are you? Here it uses the cross above. Let's just try that for now. So I don't think that the two of them together are going to perform all that differently. Where did it go? Oh, did it go into oscillators? Okay. You went into oscillators, apparently. There we go. 10, 1 minute, click commission. Okay. So that actually, oops, let's see here. That made it perform worse, which I guess would make sense. Perhaps you are suggesting that I apply the Kalman to the Fisher transform, right? Like this. And then, yeah, so I understand the removing the noise part, but that doesn't necessarily mean that it's going to work. Because here, what you're doing is you're making this assumption that price will be predictive of the future if you remove the noise, but it's not necessarily true. It didn't work. I bet you that there's an error though. No, it did not actually create an error. It must just not be catching that threshold, maybe. That's not what you said, but it's an implicit conclusion. I mean, it's an implicit theory, right? Why does that not work? Here's the thing: is if you want us to test this, you're gonna have to be like way more specific. I have them all. How do you want to combine them on here? I'm gonna add this on here again. But what I'm going to do is I'm going to make the input series be this right here. Well, that runs to be about it the same as... Oh, wait, how? That is weird. Oh, that's my fault. I see. Because here in my Kalman, I'm not using input, I'm using close and stuff. My bad, my bad. Hey, Big Toasty. Did you do any more? We tested Big Toasty's indicator yesterday, and there was definitely something to it over the past few months. But when we kind of went out to larger things, the thing that I thought was weird was you were saying like, oh, you can really get them to run with it. But when I tried doing any of those, it didn't really work out. Aha. So now you get something that's not really much different than what you would get on just the plain Fisher transform, right? But now it should run. We should get close to that 929. I will dump it. I wouldn't completely dump it, but I don't know. It's just where it comes into that. It seems to me that current price is not necessarily indicative of future price. That was worse. Oh, because I don't have the right threshold. And change the threshold back to 4. Okay. It's actually a little bit worse. But you know what, though, Big Toasty, it was quite a pleasure to work with you because you knew exactly what you were looking for. I get so sick and tired of people coming in and saying, well, this technical analysis works. And then when you have them describe what their system actually is, it turns out that they don't really even have a system. It's like they can't describe what they're doing with it. It's like, look, here you put all of the indicators on the chart. And then you say, when this happens and this happens and this happens, this is when you get in. And it's that simple. And I don't get that. So we could try combining, just trying to combine the Fisher transform with the Kalman moving average in and of itself didn't do anything. There could be a bunch of different ways that we could combine them, right? Like you could say if the Kalman is rising and the Fisher is rising, or, when they cross certain thresholds, there's really like 3 or 4 different dimensions that you can do on it and combine them. So there's probably like 16 different ways that we could combine them. But without him going into how he wants to combine them, I can't take it any further than that. So I'll close that for now. I'm glad to hear that. Good deal. All right, so it looks like that our regular J is doing okay and our J2 is not. So do I... Well, we should give him a few days, but yesterday J2 didn't trade at all. Today he's trading, but he's not making money. In fact, he's very much... Well, okay, he's only taken 4 trades. So that it's probably too early to say anything about it. And you can see Brandon tried taking a bunch of trades, but they didn't work. Did you ever trade stocks? I'm always curious as to why people chose futures. So I have never gotten into day trading stocks. I've taken a few day trades on them, but generally overall I avoid it. And one of the main reasons that I do so is because I've seen the specialists and I see the data that the specialists have, and it's like there's no way you're even remotely competitive with them. There's no way you're even remotely competitive with them. Like just the data and the models that they have on the actual company to value what the company should be worth at any one given time is a huge advantage to them. And then people try and trade all of these technical setups, but like here again, we backtest all of these things. They don't work out. They don't work. They can show performance that will fool people if they don't know any better, but they don't meet up to the standards that I think a strategy should before you start trading it, right? On top of that, you have to have, you're limited on the number of day trades you can take unless you're trading like, what is it, $20,000 account or something like that. And then the big one is that you can't see the full depth of market usually. I can see depth of market stuff through Fidelity, but it's quite limited, and it's not anywhere even close to as effective as what we got in the treasuries. I would have liked to have taken the treasuries long. I was watching it out of the corner of my eye, but I just didn't really see the setup for me to take it long. So I feel like I missed out, but I just didn't have a trade there. Why educate on dumb liquidity when? Well, I just don't. I'm not sure what you're saying. We don't have a trade right now. Is just flat out. I don't think I'm going to take any trades today. In fact, that could change when the E-mini opens. But right now, I don't see probable trades. What's your opinion on Amazon? Amazon is a really good, big, large cap company, and they're a growth company. So as interest rates rise, they will probably run into difficulty with the rest of them. Anyways, I really don't see how people trade without being able to see like the depth of market stuff, particularly like cumulative delta, because when you're just looking at price, it's just not enough to understand what's going on. Square will buy a majority stake in Tidal, the music streaming service led by Jay-Z. That's interesting. What is depth of market? So what we're talking about is what you see up here towards the top of your screen, right? So I can see every limit order placed out there. I can see what the best bid and best ask is, and I can see it historically too. They'll give me historical data on it. And I can use that information against the actual executions to determine whether any particular order was a market buy or a market sell. Once I have that information, I can understand why it moved, right? I can see if the market makers were holding firm and the market orders just pushed through them, or if market makers pussied out and pulled their orders and let it move up. Is Buzz? Oh, yeah, I totally forgot about that. I bet you Buzz is going to be up today. Let's put a chart of them up. I don't know. No simple data available for them. My guess, and this is just spitballing, but my guess is that Buzz is going to do really well at first as everybody tries to get into it, but that they will find that managing a portfolio of that nature, especially if they get big, is very difficult. Okay, well, on the initial move, it was long, and there was a healthy amount of volume on it, actually. So that makes me slightly more interested. Oh, man, those robots are taking a lot of trades. J2 is doing terribly. There we go. Do the bots ever do? No, yeah, they do. Some of them do. Lately they seem to have quite a split personality. Gabby tends to do well though. Gabby seems to be the star right now. I think I could actually trade Anthony more. You don't have to give me money every comment. What indexes do you prefer the most? I honestly, for analyzing Bitcoin price movements, which I'm kind of like, yeah, I gotta look at it, but I don't necessarily think that it's effective predicting anything. I just look at the Bitcoin futures. If I'm really getting into like altcoins at the time, then maybe I'll have a watch list. But what is the open depth and the open flip chart? I'm not sure what you mean by that. Do the bots ever do well? The thing is the issue with the bots isn't that they always do poorly, as much as it is that I usually do better. The auction vista, it has some oscillators. Oh yeah. So like, there's a volume chart, there's a total depth, there's a flip chart. So okay. So flip chart is basically if you open this up and there's like the what do we call it? The snapshot columns that show how many lots added or pulled at that price, right? The flip combines all of those levels together and makes it an oscillator. And the depth one is just the overall market depth. Okay, so they're looking bullish here to start. Probably was a bad spot, but okay. Oh man, that opening drive was very aggressive, wasn't it? Okay. I mean, I probably could let that run, but oh, it's today, March 4th. I forgot that was all like people were QAnon people were saying that the real inauguration would be in March, so they're all paranoid about it today, I guess, but I doubt anything will happen. 31% of QQQ's gamma runs off after tomorrow's weekly expiration. This will lead to a squeeze higher as dealers unwind claims zero hedge. Also, U.S. Treasury repo fails jumped Wednesday to the highest level since November as the amount of 10-year shorts in the cash market overwhelms the supply. Yeah. They have an article about that you should read. You doubt as in you have any shred of belief in that nonsense? What was I talking about? Why, are you a little delayed, Jesse? Make sure you click the live button down at the bottom of the window to make sure that you're caught up. Oh, QAnon. No, I doubt. Well, so it's not that I have any shred of belief in that nonsense, but as in I don't really think that anybody out there at this point believes enough in that nonsense to actively do anything at the Capitol. Is what I was getting at. I believe that the politicos like way vastly overstate the threat and popularity of it. Yeah. So what's going to happen is they're going to get all geared up for a possible terrorist attack and nothing's going to happen. Okay, so there's some distribution at 32. Well, I was like, J2's not doing so well, but now J1 is doing worse. So it makes for a good show of force, though. Well, it makes you wonder, when are they going to get rid of the National Guard? That they're, this is the other thing, is that you know, it gets overstated, but then the Democrats really do believe that it's a threat. Like they're totally triggered about it, which it's really just kind of funny, in my opinion. Bloomberg says a watershed moment for Wall Street money management. What? David Booth's DFA starts clock on landmark 26 billion ETF shift. Okay. How come I can't pull up Buzz? It should just be BUZZ, right? Oh, now it gives me a thing. Maybe it was just because I was trying to do it before it opened up on the market. There we go. Yes. Yes, that is correct. And we can open this on a 5-minute chart. So it did have it started at 24.50 or so, and it went up $1. Yeah, I don't know.
Uzi Knesset says that level of security is warranted. Uzi Knesset says they've got themselves walled in and surrounded by more troops than are deployed in Afghanistan and Iraq. Makes you wonder, what do they plan on doing that'll piss enough people off for them to feel
that level of security is warranted? I don't think that that's what they actually think. I think that they have been sold this narrative that Trump supporters are going to try and do a revolution at the inauguration, and because the media overhyped the Capitol breach, they really think that this is all a possibility, and so that's why they're holding them there. That's why I think it's funny, because they're terrified out of their mind over nothing. Can you tell what indicator do you use? Well, the main indicator that I use is the depth of market. Yeah. Almost everything that you see on my charts are based on that cumulative delta market orders minus sell orders. That's based on the depth of market. My inventory cost basis, which you can get from speculatorseth.com, that is based on the depth of market. All of these oscillators and stuff that my robots are doing to judge the level 2, that's all based on depth of market. The one thing that I do have on a chart here that you might have that I have found useful is R squared, which gives me an indication of how consistent the trend is. And then, I use a lot of news. You realize that my opinion is that technical analysis is very limited. That the edge in technical analysis is very limited. And the edge in order flow is significantly more, but is still somewhat limited. You've got to have other things like actually understanding what's going on. So many investors are short 10-year treasuries that there aren't enough to go around. As a result, the rate to borrow 10s in the repo market reached as low as negative 4% on Tuesday and has printed around negative 3.95% this morning. An investor lending out cash for the 10-year bonds would end up having to pay rather than getting paid. That's below the negative 3% charge leveled on users who failed to deliver a security to a counterparty. Besides the massive short base, as discussed by my colleague Stephen Pratt, the Federal Reserve is taking supply out of the market through its asset purchase program. The New York Fed owns roughly $14.9 billion of the 10-year that was sold in February. Demand is so great that dealers have borrowed almost all of it from the central bank, according to the New York Fed data. Thank you. Yeah. If you can't read a chart, then or when to enter and exit, then don't trade simple. If you have gone through so here's the other thing is that all of the technical edges that I do trade off of, I've gone and I've done a back test on. So I say if you haven't done a back test and shown that your strategy has efficacy over a certain time period, preferably 4 years or more, then you probably shouldn't trade it either. But then 90% of people wouldn't trade, would they? Last day your trades was very accurate to earn. Yeah, well, I've been doing really well the past day, but the past 2 days in particular. Like yesterday, I made $100, right? But look back at the trades, right? Well, let's do it. Let's look back at the trades, shall we? So if we change this date range to include yesterday, and I'm only going to do the E-mini trades, we'll take out the S&P 500 ones. And then I press a refresh. Okay, so $107 overall. But what was the win rate on this? 1, 2, 3, 4, 5, 6, 7. Okay, 7 losers on 1, 2, 3, 4, 5, 6, 7, 8. Okay, so I had 8 winners and 7 losers. And, I had a couple that really ran that made up the bulk of the profits. But really what's going on is I'm taking, 16 ticks, which is just about right for this level of volatility. And I'm getting a probable enough setup here that it's slightly higher chance of it going in my way. But then I can do the ones that just really run. Oh, sorry. You guys are asking a question. Did you give up on that time frame continuity concept? And Bot says he gave up on it after he found out he couldn't backtest that. Well, that wasn't what happened. Is I backtested it and I was really didn't seem to me. Well, let me back up. I did find one kind of edge on it, and that is that the extended session open and the regular session open makes a pretty good filter. But this whole idea that you get more probable trades if all of the timeframes are in continuity, I tried a bunch of different things, and my conclusion was generally that it wasn't true, or that there wasn't enough edge in there for it to really be worth paying attention to. So that's why I kind of stopped looking at it. He often gives up on things. No, he's saying that to mess to what is the word? He's playing with me. But I give up on things if you go and you do the back test and it doesn't show effectiveness. I was genuinely just curious, yeah. So I still use, and that's the other thing, is that the one thing that I did show was that the open, the extended session open and the regular session open matters, but I don't need any indicators or anything for that, right? I can see where it opened, where the RTH open was. So no, it came back quite a bit there. Tesla trapped people. So Buzz is turning down, and yeah, I do see Tesla is turning down as well. ARK is having another bad day, down 2% already. So basically, all the edges lie in a data set one needs extensive programming knowledge to even begin trying to take advantage of. Well, let me... No, I didn't say that per se. I think that all technical edges can be programmed and should be programmed, and that you shouldn't trade it until you have some evidence that shows that it's effective. I don't think that you should go in and just start trying to trade something and trade it live, right? There are some things that are very difficult to backtest, that maybe you don't have the expertise or math to program, and it's totally okay if you go through and you forward test it essentially. But the issue with that one is that you don't really get to see how it performs over a period of years, right? So one of the things that I think screws a lot of retail traders up is they see something has been working this week, and so they start trading it. And then 6 months from now, it stops working, and they don't realize that it's not that consistent. Oh, no, I meant like basically the Lucky Charms be in the market depth. Well, I would say that of the things that I've found that have backtested, that I've had some success in backtests, were always based on order flow. Yes, I can't backtest the actual level 2 bits, but I backtest 7,000 daily candles. Well, if you're running it on a daily basis, it doesn't matter what. But if I can run back to 2008 and it shows some efficacy on it, then it's worth trying to trade it on the sim. If it's just on technicals, and if it's based on order flow, that's too big of a data set for the computer to handle. So I just go 2 years. You say run it on whatever you want. So show us the backtest. Why haven't you just posted a backtest, Blunt? If you're saying that you do backtest it, then why don't you just show us the backtest? I don't understand. Well, 2 years is not enough for like the order flow ones. You're right. It's not enough data, but like there's limitations, okay? I don't have a supercomputer. I don't even think that my data provider would give me historical bid-ask data that far back. Isn't level 2 and order flow the same thing? Well, so stupid bot, what I'm kind of getting at is there's these two levels of it, right? So one is using the historical bid-ask prices and the executions feed to determine like your cumulative delta and all of those sorts of indicators. And then there is the actual number of limit orders at every price. There is no historical data for number of limit orders at every price that I know of. I have ways of saving it, but it's a lot of data. So backtesting that is is you basically can't do it. Not without your own custom solution. Technical analysis is for Democrats? What? No. I mean, the funny thing is that probably more Republicans would believe in technical analysis, don't you think? I don't know. A lot of retail traders believe in the technical analysis like it's a freaking religion, man. But I think you don't need to, only if you're an HFT or something like that. Well, yeah. So that's one of the things that I'm kind of learning here is, I have these robots that are running off of, the market depth and balance. And while I'm having some problems with them overall, but then the bigger problem that I see is that it backtests well, but then when you trade it on SIM off of live data, it doesn't perform the way that the backtest says it does, and it's always just like one tick off. And so it seems to me that the reason it's one tick off is because the amount of time that it even takes for it to calculate changes the price that you get. So here what's happened is I've come across an edge that is a thing, but that I can't actually compete with. I'm not fast enough to get. That's what it looks like is the case with J. So now I'm trying and expand upon J and see if I can find something that will give me, that will overcome that disadvantage. I'll never understand this, that every side hates the other side. The technical side hates the order flow traders or vice versa. Well, I understand it. Listen, let me explain it to you. The technical traders don't like being told that their whole life is based on nonsense. But the reality is that most of these guys aren't testing it, and they have no probabilistic edge. I get it. Wouldn't you be mad if somebody came in and said all of this work that you're doing, everything that you've based your trading on and that you spend hours a day doing is all for naught because the entire premise of the thing that you're trying to trade it off of doesn't actually work? I mean, yeah, you would be mad. But the issue is that it's like the only reasonable conclusion from the data. It's like I'm pretty certain that technical analysis can have an edge, but that it's all been arbitraged out. They say they lose because of their psychology. Well, yeah, exactly. Because it's really easy to blame yourself. Isn't it so funny? You always say like, the thing is you have to take responsibility for your trades. But here I'm saying that you taking responsibility for it ultimately prevents you from being able to develop the edge, because the reality is that the edge that you're trading pushes you towards making those mistakes. Would you recommend Lilo? I wouldn't recommend them. If you are really confident that you'll pass, then go for it. But is technical analysis different from quantitative analysis? This is a good question, Ink, because these things aren't really well defined, especially not in the retail industry, because in the retail trading industry, these are just buzzwords that people use to attract people to their strategy, right? I can come in and I can say technical analysis, and everybody that likes technical analysis and believes in it will read it. And there's other people that don't like technical analysis, but they'll hear quantitative analysis and they'll say, well, technical analysis doesn't work, but quantitative analysis does work. But then the question is like, what is the difference between them, right? But for me, when I think of quantitative analysis, and especially the kinds of edges that these large funds are using, like these hedge funds use to make money that are based on quantitative analysis. It is typically has a lot more to do with portfolio theory, right? For instance, doing a long short equity strategy, and that's how they make their money. And it's not as much a, taking one instrument and trying to find a probabilistic setup with it. That domain, as far as I can tell in the professional world, is almost exclusively the property of high frequency trading. Would you say auction market theory is a part of technical analysis? Well, so yes and no. Based on the way that the majority of the industry uses those terms, I would say no. Because the majority of the industry thinks that technical analysis is price patterns and indicators that run on price and volume. Okay. Whereas the retail industry thinks that order flow is a technical analysis that is run off of depth of market information, like the historical bid ask and cumulative delta and all that sort of stuff, right? But then I go back and I think technical analysis has to do with market generated information, right? So as far as I can tell, auction theory is a thing with some empirical evidence to back it up. But how you pull an edge out of that is a much different question. What do you think that Renaissance tech uses? I think that the majority of their edges are based. Well, I think that they have a little bit of everything, but they're much more on the quantitative portfolio theory side and on modeling. So like saying, here's all of the things that affect this company and what we think it should be worth based off of that, right? They're pulling a lot of data from a lot of different sources to get like a really complete view. And that's what can be such an advantage for those guys. Tesla down 2% now. Yeah, it is. FCX is down 5%. That's something else. GameStop and AMC are all taking it. Palantir is surprisingly up. Oh, we are going to get the factory orders number here. So we're looking for a month-over-month number of 2.1. Okay. Getting 2.6. What do you think would be a go-to trading food? That's funny. What do you think about trend lines? I think that of anything that is unreliable, that it's the drawing things. Thank you. When they're saying price goes like this and look, oh, it follows this trend line, that is bullshit. It does not respect those lines at all. The thing is, like at least with price indicators, you can at least get things that tell you, okay, like your risk reward is better here. But your TA drawings are so great. Well, I keep trying to draw you pictures because I'm trying to explain to you guys the quantitative models that have empirical research behind them. This is a thing that I think is like, I just don't get it, guys. We talk about, and a lot of you guys are here every day. You're all asking me questions about technical analysis, and nobody ever asks me, hey, Seth, explain the Kyle model. You don't think that the model that all of the market makers out there on the market are using as their base maybe something good to know? No, it does. Nobody cares about that stuff. This is the thing that's so funny is that some of the best edges out there that I have found, they were literally like published papers. Anybody can go and read them. And the reason why retail traders don't take advantage of these edges is because they just don't care. They don't look for them. It's too complicated for them. They look at it and they're like, oh, I'm not going to read this huge technical math paper. Just tell me what indicator I need to add to my chart and follow. Is it possible to link them? Sure, it is. Here we go. What would be the best one to use here? I get so many links if I search for Kyle model. Oh, I want the original one. Let's go to scholar.google.com. I'll pull it over here so you can see what I'm babbling about. It was 1985. There you go. That one isn't the full paper. Oh, maybe not. Maybe that is the best link for it. Okay, there you go. You've never heard of that model. I had never heard of that model before I read that book either. Someone believes that they are as dumb as trading on their phone. If someone believes what? Somebody he's off in his own world. Don't know what he's talking about. Snow is down. I bet you that my Sumo is getting creamed. Yeah, 5%. Sumo is getting creamed more than. Is that get me back to where I bought it at? What is no, but close. It certainly brings it down. I bought it at like 16. So wait, how is that? Oh, maybe I didn't get it at 16. I don't know. Silver's getting hammered too. See that? This is the dollar. This market is looking ugly, guys. I am not sure that profitable traders have the time or willingness to write a paper. They spend their time partying. No, well, no. Let me explain how this works, guys. Like, it's totally a thing. What you do is you do all of this research at the university, and then you publish your paper, and then all of the big Wall Street firms want to hire you, or you go and you start your own company, and you have all of the prestige from putting out this seminal paper, and you get your employment that way. Do you see the people that write these things? They're not going to bother with retail trading. They go and they trade for a firm where they can trade real money, right? And it's available for anybody to go out there and read and try and understand and maybe even try to extend themselves. But retail traders don't even know about it. They're too busy chasing after the latest technical analysis indicator. Well, BUZZ's debut not doing so hot so far, but I would expect them to be down based off of what their strategy is. So, wow. Okay, so it's getting a little furious now. I'm surprised that I haven't gotten the warning error. Okay, so can you tell me why cumulative delta is bullish and market goes down? I absolutely can. So when you're looking at the depth of market, this is another thing, is in order flow, for some reason, we tend to focus on the wrong thing. So the thing that I would pay attention to the most, the thing that I have found is most predictive and most important, is when market makers pull their orders, not when you see an iceberg or when the market orders are going a certain way. So here's the issue with the market orders themselves, is you can't predict them, right? You can see that overall there was more market buying than there was market selling, for instance. But that doesn't really, it's not effective at telling you that more market buyers or market sellers are going to come down in the future and at what time they're going to come, and therefore you should take it here or there. I've tried a lot of edges like that, and I just haven't been able to find one like that, okay? But what I have found is that when the market makers are polling, that means something, okay? And this is why you should read about the Kyle model, because what the Kyle model says is, based off of the order flow that you're seeing, or if you have a potential piece of inside information, you should cancel your orders to certain prices to account for that, right? So the reason that price will go down is because the limit bids are pulling, and so it doesn't take as much volume to push it down. So I originally thought, oh, okay, like price is going down even though cumulative delta is up. Maybe that's a divergence that means I should buy. No. It means that the market makers are pulling their orders, and then you have to wonder why. Why are they pulling their orders? Do they know something that I don't? Is it just because of the order flow that they're seeing? Okay, so can we tell limit bids that can be smart money? Well, I mean, you can just see the overall. So it's really hard to see it in the ES on a tick by tick basis, but in the 10-year treasury, it's very clear, right? In the 10-year treasury, I can look at this and I can see, okay, like if they tick it back down and only 500 contracts, and then they trade down again on 500 contracts, and then again on 500 contracts, like something's happening. The market makers are just pulling out of the way. So stupid about, oh cool, is that what you were testing? I mean, the pulling, that's one of the things that I've tested. That's one that you can't necessarily back test per se, but we have done some of the indicators that you get from speculatorseth.com. You can go and set them up a certain way so that you can see the aggregate pulling, and you will see that the aggregate pulling is much more in line with the direction of price than cumulative delta tends to be. In other words, pulling has a larger effect on price. It's more reliable. This is something that I think that we've pretty effectively confirmed through our own observations, and matches up with the empirical evidence that has been collected in the scholarly literature. Yeah. Well, you think it'll go lower? I mean, they still got room on the downside to go, but there is some liquidity trying to hold it here. I find that different markets respond differently to market orders, and the cumulative delta reflects that. Doesn't work the best on ES. Delta divergence seems to work better on NQ. Well, so that is going to be true, especially when you're talking about like how much of a derivative market it is, right? Like go and look at cumulative delta on an FX futures chart. It makes zero sense at all, right? But then you just realize that, oh, the futures traders are a pretty insignificant portion of that market. The people that matter are the bank traders that are trading over the counter. It's pretty algorithmic today. Well, I tell you what, this downtrend is pretty wild now. We moved up 10 points, and now we're selling off 20 points. There's a little bit of a pullback. I don't know. I still think I'm going to wait a little bit. When I took that original short way back, that really should have just held that more, right? Oh, are these guys trying to take it along? Oh, and Gabby took one and lost? Well, one of the issues I still have with the robots, and that I think I'm going to need to resolve if I'm ever going to trade them, is that when the volatility comes in and we start having negative days, most of them don't do well. So Jay was supposed to be, part of the bread and butter, but that one doesn't work, right? Brandon's supposed to trade it both ways, but today he's not catching it the right way for some reason. Joseph is only long. I think Squire is only long too. Indy is another one that yesterday did really well, but today he's not doing very well. So, but then Seth only took 2 trades today, and he got 2 winners and is feeling pretty good. And maybe we'll try another one at some point. There's probably okay for a small pullback here. It's a really hard to try and take it right there, because they could decide to smash it down to the low again at any moment. Buyers stepping in, futures trader 71 once said at the overnight sessions, higher lows, either one of them will be yeah. I don't think it's as high as 97.5%, but it's pretty high. So so this is one that I'm gonna let you hit for free. So if you, I think that I have it in the download section of the futures Discord, and I also have it on futures.io. There's a framework where you can test daily setups like that. I've actually found some that were even better than that. I've found some outliers that were like 60% actually. The problem with an edge of that nature is very similar to the problem with RSI. Like RSI, if you only trade it cut and reverse, you can make money. But how far are you going to let it go before you're going to say it's not going to work out? And on that point, there's not really a good way to do it. So you can come in and you can say it's going to extend the overnight high or the overnight low 80% of the time. Yes. But which one is it going to do? Is it going to beat the high or the low? How far do you let it move against you before you give up on that trade? Like how much risk and that's the real issue is that it doesn't tell you how much risk and what price to take. So it's not a complete trade, right? And so what I have found is that a lot of those kinds of statistical edges, even though there's an edge to it, in terms of making an actual scalp off of it, it becomes useless. Because there's no way for it to find a place where you can hold risk. But yeah, I have the one that's posted on Futures.io that I believe has built into it the main tests that Futures Trader 71 talks about. And then I've gone and I've developed my own. I've developed like 30 of them actually that I've tried, and one of them I was able to get it 60%. So the one that was 60%, if I'll share, is that if you look at the overnight move and you decide which direction it's moved more, so you look at the open and say the high is 8 ticks above the open and the low is 16 ticks below the open, then you say, okay, the larger extension was down. And then you take the 50% retracement of that move. And then you look at when price opens here, are we above or below that? And they will hold. If they are above that, then it will be an up day. And if they're below that, it will be a below day 60% of the time. Complicated. I admit that it's maybe a little bit more complicated, but it was 60%. Gary Janot, so Gary was getting really testy, so we muted him, and he can come back if he wants, if he messages me, but I kind of felt like that for whatever reason, what I was saying was triggering him and getting him to say crazy things. And so it's probably healthier for him to just not be here. And 60% of the time it works. Every time now. I mean, 60% outlay on a stat like that is pretty good. Especially when it's directional. Right. So the issue with the futures trader one is, you know that they break the overnight high or low most of the time, but you don't know if it's the high or if it's the low, because 50% of the time it's the high and 50% of the time it's the low. I don't know. Sometimes I see people say things that just seem like they're just not in their right mind. And I was getting a lot of those. Especially when people say things that I just know are objectively false. It's like, okay. Like when people say you shouldn't trade news, it's like, okay. Crazy. Everybody that I knew at Goldman Sachs had a news squawk and a Bloomberg terminal. Well, there was a new low, but it was kind of tepid. So I think what's going on in this one is that there's a little bit of a vacuum at 37.89. And so they're getting, or sorry, let's say it's 37.90. They're, oops, wrong one. And so that's why they're having trouble with that spot. Yeah. I should have waited to see if it would come back and taken it higher. Nope, 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 nope. Okay. What were you saying? How much is a Bloomberg terminal? A lot. It's thousands of dollars a month. Are we seeing some of these actively bounce? I don't know. That was kind of their last low area. Nope, I guess not. That hurt. Yeah, that hurt. We're okay. I'm tempted to try and use the other contract to just improve my position here instead, but I don't know if I really want to mess with that here. Okay, so there's some volume going through there at 3801. Yeah, it was 12 Eastern time, so we still got like a good 90 minutes. It'll be after I'm done streaming. Well, shit. That's about all I'm willing to play with that. So we'll switch. And we'll go back to 1. No, I didn't want to there. Okay. They're very choppy still. Yeah, it is. Well, it's not just that. It's like they're not. It'll like go really far one way and then it doesn't go far enough the other way. Okay. Nope. That was bad too. I mean, like thinking back on it, that last one, I'm not even quite sure why I took that. I mean, like I had the spot, but I didn't really have a strong opinion about like, was it going to go up or down? I guess I still feel like it's tilted to the downside. I tell you what, some of these stocks are really red. Like there's a lot of 5 and 6% downs today, huh? And ARK is going to be in so much pain by end of year, I bet. So I'm kind of thinking about like those last two, and I didn't had a hard time getting ready today. Feeling a little tired. I'm wondering if that string of bad trades was in part due to fatigue. But it's here where you get this thing again with my own trading, where all of a sudden you get these string of losses that I can't explain, right? Have you ever had an order on Sim that you couldn't cancel everywhere ever? No, I don't think. Not even from like the control center and go into positions and just right click close position. Yeah, I figured it would disappear. No, that's kind of weird though. Well, this whole trade right here is kind of acting kind of weird, don't you think? That is weird. And it's a sim trade? Is it like a internally done sim trade on Ninja Trader, or is it like a sim system sim? Man, they're having a hard time there. Maybe this is just not going to go back down. Oh, wait a second. Why am I? I guess this is tighter than I thought it was. Should Kumo resign? I think so, but... Oh, when I worked for Goldman Sachs, I was in Salt Lake City. I was in technology, so... I am. This day is kind of interesting because the market is probably waiting on Powell and everything, but that initial move was pretty big, right? But you can see how it turned from like the first two trades, it really trended and it was good, to now it's just slicing and dicing. So is sitting on your hands a better policy right now? Probably. At least up until this point, it has been. You're going long here out of boredom. Oh, come on. That was a little crazy. Yeah. Oh, did you see what happened there? Somebody came in and swept it down, and then there was all the volatility, and I was like, okay, fine, I'll take it. And then the buyers won out, and it was like almost immediately people stopping out above it. Look at the cumulative delta rise there. I knew that 3909 was a spot, but I didn't expect it to go through like that. Okay, so they're running into some big size absorption here. How many monitors do you have? I have 3 monitors. Get in the game, you're like, man, I think I'm handling it okay. So I've kind of come back to, right, sometimes you're gonna have bad days. So overall, I'm down $20. That's not so bad. So, and we've got a runner going. So, do we have a spot to buy it? No, I don't. Our this stream doesn't work like that. No idea how far this pushes. Well, I tell you what, that was an awfully bullish movement, wouldn't you say? It's hard though because of the way it came down to tell where they're going to be, what the spots are going to be on the way back. To manage this as a runner, it's hard. Do you only trade email? Well, I'll trade the ZN sometimes too. I'll trade the 10-year treasury sometimes too. I kind of wanted, the thing on the 10-year was I wanted to come in and take it long today, and my plan would have worked out, but I didn't really catch an entry spot. I mean, I wasn't paying super close attention to it, but I never really kind of saw the action that I would look for in that 10-year to do it. So J Powell will tell us just to buy the dip. Who knows what he's gonna do? I'm wondering if he's gonna hint at Operation Twist. I heard a lot of speculation yesterday about Operation Twist, which is why I made a TikTok video about it. What would J Powell do? Is there a video on why he trades the bond? Oh wait, what are you talking about here? Well, listen, treasuries are hard to trade, and you'll be a better trader if you know how to trade them. You understand what makes the bond market tick. You have a huge, because there's so much stuff going on in the bond market right now that the equity traders don't have a freaking clue about. I think he will announce the SLR extension today too. Maybe. I mean, Operation Twist or changing the size and duration of purchases, I think it would be in the cards. I really don't see this action in the treasuries subsiding otherwise. So, okay, so there's a little break. I'd like to make sure I'm learning from people who are consistent. That's all. Oh, no, I have to give you this speech again. I already gave this speech today. There is a lie in the market that the way to be successful at trading is to follow other people. This is false. I can teach you how to develop an edge. Okay, I can show you the process that you go through on. You have a theory about the market and you test it out, and I can tell you certain things that we do know about the market that can kind of help you narrow down your search. But the reality is that in order to gain a competitive advantage in a market like this, you can't just go off of what somebody else has given you. So the point here is to develop your own edge. So, are you learning from people who are consistent? I don't consider myself consistent. No, I don't. So, to trade consistent successfully is to do it on your own, yeah. You ever read the book A Confederacy of Dunces? No. You know, people thought that I would like the movie Idiocracy, and I thought it was a stupid movie. I thought that it portrayed a view of people that's not accurate to how people actually are and why people do dumb things. I'd be more than happy. I wouldn't. I'd be more than happy to follow someone into and out of trades all day if they were. Because what happens if they die or they disappear? Or their edge stops working? Right? Well, there you go. Then maybe you're in the right spot, Rick. Trade on my own, but just wanting to learn more. What I'm always trying to avoid is people trying to come in here and use the channel as like a signal service. I don't want people to follow my trades. What was the thing that brought you into the trading? I would say that it was the 2008 crisis. Kind of like, you know, a lot of people are being brought in now because of the COVID crisis and GameStop and stuff. It was kind of the same thing for me in 2008. And then that got me into working for a bank in technology because, you know, I was a computer programmer. And then when I got out, I wanted to trade. So I started doing this. Buy Buffett until he dies. Well, I think that Berkshire Hathaway can continue to be a good company even long after he's gone. And after Charlie Munger goes, because the smaller proteges that they've got are good too. It's kind of funny, all of the people this past year that have been saying, oh man, Buffett's over the hill, you know, like he's not that good anymore. Retail traders, I think he's going to have the last laugh in the end. Hmm. Man, the two J's take a lot of trades, huh? But J1 has done better than J2 today so far. I think we could improve the level 2 portion of them, but I'm also thinking that it's not a strong enough filter. Did you jump right into futures or start as an equity trader? Well, I started as an equity trader, yeah. But what happened was that when I first started out, I found that it was a lot easier to predict what the index was going to do than it was for any individual stock. You know, I wasn't following, I didn't have a news squawk or anything down then. That was kind of what initially drove me to the futures. And then as I was trying to find edges, you know, I had read stuff on Futures.io about trading the depth of market and trading treasuries, like the John Grady stuff. And then when I was at Goldman, I talked to actual traders and they were using depth of markets. Now, they straight up said, like, it's really hard to be successful as a retail day trader, and that you're probably going to lose money either way. But they were trading the dumps, so I was like, okay, I will do what they were doing. So that was what got me into doing the treasuries. And I have to say, I really don't think that there's a better way to learn than to start out on the treasuries. And learning that market, because once you understand the treasury market, you have so much of an advantage over everybody that doesn't. Nobody expects the Spanish Inquisition. That's funny. Well, it kind of looks like it wants to go up and make a higher high, but I don't know. Oh, it's so hard. It's tough in this spot. I'm not really seeing the cumulative delta increasing into this, though, so I don't know. Why not work for them again? Well, so for one thing, I can't day trade when I work for them unless they wanted to take me for trading. If they approached me and they said, "Hey, we want you to do market making for us," then I would have a hard time turning that down, even if I had to move. But I want to stay here in Utah, and that kind of puts a kibosh on that thing, right? You know. So I look for jobs I have like alerts and stuff, but there aren't jobs like that in Utah. And I could work for them in technology again, but like, why? Like I get paid more, because with Goldman, so much of your compensation is in bonus, where it's like other places, it's like way less stressful and everything else. I just don't see the advantage of going back there. Plus, where the way that they work there in Utah, they've completely changed it. So it's not really my domain over there anymore. They're doing like the Marcus stuff. More power defaults as Texas energy crisis widens. ERCOT releases shortlist. Okay. Well, let's see here. I can see the Japanese yen dropping pretty hard. Oil taking off after OPEC here. Well, that was my stop there. I should have had it. I should have moved it. Shoot. So is the stock market reacting to what the hell? Well, I'm going to take on some risk here. I don't know if the market turned over there because of OPEC or what, but what just happened? I don't know. Yeah, it's very curious. Oh, they've decided they're not going to hike output. That's why oil is taken off so well. But I'm not sure why the equity index is the price of oil going up impact them that much. I'm not so sure if that's what it is. They're waiting on J Powell, yeah. So it's still an hour off from J Powell. I will be ending my stream though before that. Okay. When I said I'm thinking about taking on more risk, I was like really thinking about like adding a third contract there, but I probably should have. But I think that keeping the risk low is right now is still a good idea, even if I've got a spot that I'm really interested in. Say tech as well. Let's come and look at. Oh, Buzz is doing. It's okay. Tesla's not as bad as it was for sure. Arc is still a disaster though. Okay. Well, that was a real dip, sure turned back up easily, didn't it? And yeah, it's a big move in oil, by the way. Like we were $61 earlier and it is 64. It is a $3 move in oil. I guess maybe it was why they did that. Well, why wouldn't they cut it? Again. Unstable. So again, I'm not exactly sure what's causing those, but it looks like the buyers are taking advantage of them. Like when you get a low liquidity push like that, you will often see guys on both sides push. So the buyers will just buy it back up and it'll snap all the way back up really easily. And then if you're able to snap back through the other side of it, it's like everybody sees that and encourages them. Why is my financial juice sending me those little siren noises? That last one too may just be people thinking that it's not going to get back to 38.26 and saying it's a failure. If that's the case, though, I want to buy it here. Like, I don't think I need to because I got a pretty good runner, but if we come back up here and we touch 27, I think that there could be some fireworks. Ooh, yes, come on, do it, come on. Oh, some pushback there at 25. Do it. Oh yeah, that's some stop. I mean that wasn't the best stop run that I've seen, but I'm happy with it. Maybe another little step and maybe we could see more. Or if we touch the high of the day, that could be some real. Oh, I didn't realize that we were getting treasury refunding. Okay, well. You love financial juice? Yeah, I'm a lifetime a founding member, whatever, and I'm quite happy with it. And I have a affiliate, I have an affiliate link with them if you go and find my video about trading the news. So ooh, yeah, look at that. Ooh. And a big old buy order comes and chases it up, and they fill him almost immediately. And now thousands trading through there. We're at the bottom of a profile area at 38.30. Some selling through again. That was something else. I don't know what that was. 38.30 though is the place. See what happens now when they return to the scene of the crime. I don't know, was that somebody really big just FOMOing in or something? Oh, the Jays are taking so many trades in through here. It's ridiculous. Why are they taking that many? They should only be taking them one way. Well, long. Yeah, I don't know. They are only taking them one way. They're not making money on their longs? Well, one of them did take it short, in fact. How can he be taking it short? Oh, well, maybe it's, I don't know. Oof. What the fuck? I can buy that one. Okay. They seem to be recovering from that okay. That was what something else. I don't think I've ever seen things like that before. They need to frustrate everyone? I don't know. I'm wondering if I don't think that a move like that would necessarily be somebody trying to throw a bunch of orders into the futures to screw the markets up, you know? I'm thinking that has to be news or individual stocks moving really big for some reason. But I just don't, and it could be because of this oil news. I don't know. That's crazy stuff. Market getting a little cray-cray there, that's all. Oh, that's interesting. Why didn't she take it? All right, well. Matt Muller, how are you? The baby is doing pretty good. After pull-up parabolic rise, well, yeah, I mean, that's a pretty big move. They tend to do these sorts of things where they go, yeah, like that. And they'll kind of zero in on the right price. I bet you there's ways to calculate that based on the supply, what the new price should be. Well, they seem to be willing to fight it out here. Oof. You see that? So some stops there at 24. Man, look at my chart. That's all just crazy. JP Morgan clients are getting concerned about concentration risk. Okay, so there's another little sweep through there. What the hell? There's got to be like some news lurking out there, and two sides are really confident about what they've got or something. I'm just going to assume a 10 to 20 point move is normal today. Well, even on a day like this, 10 points all at once like that is not normal. It's like 2020 March, April craziness. To some extent, yes. I kind of feel like that, yeah. I remember seeing sweeps like this in like 2018, December 2018 though, yeah? You remember those? Wait till J-Towel. Well, we got about 15 minutes left. I don't know. We'll see what happens. It's only those sweeps that are moving it. Otherwise, it just kind of keeps going sideways. The cumulative delta's definitely turned around, though. Back to the open again. Okay. Well, maybe a little bit of buying strength coming in there, but not making it too far. I look, there definitely offers pulling out of the way up to 17. Hmm. Hmm. There we go. That was a strong, turning into a strong looking bar. And coming back and reading chart, and I'm like, oh man, I've been in my own world watching the E-mini on that one. You think that they'll go and make a new high? This bar is looking strong too. Wait a second. That doesn't make sense. I'm sitting here like, oh yeah, it'll totally go up to the new high, but now I'm sitting back and wondering, why do I think that? And I can't really explain why. And in fact, I'm kind of sitting here being like, well, that move up was a little too strong and kind of out of nowhere. So maybe they'll give up some of it. You're still getting kind of these aggressive down moves, huh? This is kind of getting tense to me. I'm probably a little too hyper focused on the tape at the moment. Russia gets exemption from OPEC plus supply deal, says the delegates. Oh, okay. Looks like silver has recovered some of its overnight losses. And well, ARK and Tesla and so forth are all still not looking so hot. Okay, so that's another really strong looking bar. Wow. 80 pounds of meth found in car during traffic stop? That's a lot. You haven't even messaged me this week, John. I've been waiting for you because you haven't seen the Gabby back test. What was the one that you were looking at? Don't even remember. You are pretty far down the list though now. A lot of people have been messaging me this week. Oh yeah, like I sent you a picture of the Gap thing and you never responded to it. Oh, that's right. It was the RSI thing. I did try a bunch of other different things on that, different variations on that one, but I couldn't find anything that really showed any real performance, fortunately. We need to cut off our association with him. Oh, geez. I'm sitting here. It's so funny as I get the trolls that are like, all you do is yap, and this isn't trading. And here today, I'm pretty focused on following this action. I think that they're gonna move up, but I'm still watching it very carefully. And so now the regulars are complaining. So some good bullish action there, but they're still having trouble making it back up to 38.30. Oh, it sure is volatile, huh? Because all of those moves are well more than 4 points. And the deltas are actually still kind of negative here. So that's something I should be factoring in here, huh? From the Troutster, what are you talking about? We will do that someday. I'm starting to think I need to make myself a new computer, right? I'm like, I've saved up a big chunk of change. I've saved up a big chunk of change, and so I mean, I have an account already that I could be trading, but I have not felt confident enough in my trading. Yeah, I keep getting things like this today where it's like I'll have a really big drawdown and then it'll come back, and yeah, I just there's still some issue. I'm not sure where it is. I don't know if it's just a mental thing, like if I go on tilt, or there's a certain thing about this place that I'm watching that doesn't work, but a certain filter that I need to be applying. But so I haven't been trading off of that account, but I've saved up a ton of other money. So then I'm like, well, maybe I should just go and buy the Threadripper so that I can back test faster. But at the same time, yeah, I back tested Gabby. Gabby's good. Jay's got problems. And I'm not really back testing that. So it's like, what am I back testing right now that I would need it for anyways? So but I do really want a new machine. You could. Would you buy co-location if I had a strategy that needed it? Utah life, is there good fishing in Utah for that sort of a thing? I don't think that it would be any better than where you live, but so it looks like I have to take it off here. Okay. Well, I think that I do still think there's a possibility of testing the high, but I gotta go. So in the end, when you take all of those E-mini sim trades together, I did come out with a slight profit. If I had taken the top when we saw that craziness, I really should have been like, maybe I should take it off here, right? Then it would have looked good. But this string of losers, I don't get why I do that. I'm not sure I understand. Well, there was sell, 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 which was right. Then buy, that was wrong. Then a couple of like flipping around, flopping around, sell. So this does kind of have some indications of like not being sure of yourself, but yeah, there it goes in and buys up big time. All we have to do is get through the COVID. Oh, well, you know, I would think that Utah would probably, well, Utah never had a mask mandate per se, but like cities have. You could come down in Utah and do that sort of stuff and nobody would stop you right now. But Ace would stop you because his wife is immunocompromised. You haven't gotten shot yet, have you? But sometime in the next 2 months, supposedly everybody should have it. I don't know, that buy up there was a little bit. I mean, that's what I thought was going to happen, but I guess the part of that was the London close, maybe. But I've got to go. I've got to go. Anyways, the whole point was I'm not sure what's with that. Now, coming over to the robots, it looks like Gabby only took one. Right? Oh, she took two. One winner and one loser? Yeah. She could have taken a third one probably, but the third one would have been good, but anyways, I guess the one thing that I can program that I haven't looked at yet is the co-integration or whatever. But yeah, most of these did poorly today. And we need to work on the filters for Jay. I really think that Jay can work, but I'm not sure how to filter him. He catches a good spot for sure. He for sure catches a good spot, but it's not probable. So, all right, guys. I will see you guys tomorrow. It wasn't a disaster in the end. I don't know. I still don't feel good about it, even though it was a win. And it did switch my account halfway through too, so that was like the losses would have been a bad loser day on the live account. So I guess it's an acceptable day, but it does make me feel like nervous about trading it live still. Okay. Maybe a part of it, a little bit of how I'm looking at it is still pretty new. Maybe I just need more experience with it. I haven't seen it as much in some of this more volatile action, so that might be part of it. Yeah, 33 people. Yeah, a lot of people watching today. So hit that like button. We had more likes yesterday. It's okay. And subscribe if you haven't already. But I'll see you guys tomorrow. And in the meantime, stay